Panic stations as Bitcoin experiences a 17% drop since the most recent high at around $74,000, just a little bit under that number. I'm going to get into what exactly is written all over my charts right now and show you where we are in the current cycle. Before I do that, apologies, I don't have a camera today, and I probably also don't have the best sound, but because I'm traveling on the road, my equipment is playing up, and I figured it's more important to get this video out to let you guys know where we are in the cycle than to have a camera on. So if you are appreciative of this emergency update, please be sure to smash that like button nice and early, and let's get into how the model is playing out this week so far. Now, I'm currently on the 1 hour time frame. The 1 hour time frame for Bitcoin is important because when we're doing our counts and our levels, we really want to zoom out to find the last peak formation, high or low, and you start your count from there. Now, that does mean that sometimes levels can run over a couple of weeks, or it can run through a weekend, and that's what I want to go through with you right here. So you'll notice these shaded lines on my chart right here. Just to explain them, they show you the breakup of each day. So they're shading the dead gap zone, which is a 3-hour period that happens before Asia opens, and it's between 5 p.m. New York to 8 p.m. New York. So that's when the market is technically open, but it's not an actual market maker session time. We usually expect a lot of volatility and a lot of manipulation kind of happens in those 3-hour zones. But when you have this on your chart, it's very easy to identify the day breaks. In addition to having the sessions down below, this is just easier for the entire day between 5 p.m. New York to 5 p.m. New York. And then you can see through here where we don't have anything shaded, that just indicates that that's the weekend. Now, if you want this on your chart, it is a free indicator that we've created for you guys. So you just go to indicators and type in the word market session, and you'll see it here, market session times by trade, travel, chill. You might have to muck around with some settings to get yours to look like mine, because sometimes it will shade the background, or you can choose to have the dots down the bottom or the top of your chart. So play around with it, you will work it out. But the moral of the story is we want to know these day breaks because it makes it very, very easy to know how far back in time we've gone. And what we can see here is that this is the current week right here. This was a weekend, and this here was last week. So the last peak formation that we have on Bitcoin actually happened last Thursday. Now, we know that Thursdays is usually midweek reversal day, depending on a news event. And we can see that after the start of last week running to the upside, our midweek reversal last week actually did come on Thursday, and we've been running the levels on the 1 hour time frame at this point in time. So this is our level 1 drop, this is the retracement, this is level 2 drop, this is the retracement, and now we're currently in level 3 drop. Now, if you're brand new to this channel and you don't actually know what I'm talking about with my levels and drops, this gives you a brief overview of what I'm talking about. This is how the typical model plays out, where we have a false move that opens the week, and that usually takes us into 3 levels in one direction. If the false move is to the downside, that direction is usually to the upside. Some point around midweek, we will have a reversal, and if the 3 levels was to the upside prior, the 3 levels will be to the downside following that, and the weekend always puts us in a trap. Looking at it the other way, if the false move starts with a move to the upside, then we expect 3 drops at the beginning of the week with a W formation into 3 rises to take us into the end of the week. Now, this usually plays out on the 15-minute time frame, and then once it's played out on the 15-minute time frame, you then have to zoom out to a higher time frame, one up being the 1 hour, to have a look to see if it's now going to feed up into that higher time frame. And so that's why I'm on the 1 hour currently, because I'm looking to see if these drops are actually going to feed up into further time frames. Let me take you down to the 15-minute to explain that. So when it comes to the 15-minute time frame, we're starting our count from the weekend that has just passed, and we're looking for the peak formation there. So on the weekend, we actually got the W in this situation. This was was our false move week beginning, which was this here. This is the false move part. And so that's right here. So the false move will usually liquidate weekend traders. I covered this on Sunday's show where I showed you these liquidations, and I showed you that that was the false move right there because it liquidated traders, and we saw that in the open interest. If you want to know more detail about that, be sure to check out the video that I posted prior to this one right now. So then we ran our 1-day false move, which took us into the M formation, which is this right here. And since then, we have had our 3 drops on the 15-minute time frame. Now, markets don't reverse usually without a news event. And so this is where we are now, and this is what we need to wait for. So we can see the M formation on the 15-minute time frame. We can see our first drop, our retracement. We can see our second drop, our retracement, and we can see our third drop. Now, the reversal will usually happen over multiple sessions, and like I said, usually at the presence of a news event, which means we have to know what is going on today. And when we have a look at Forex Factory, we can see that in a few hours from now, it's actually many hours at the time of filming this, we actually have a pretty big news event that does tend to move the market, and that is the federal funds rate, the FOMC statement, and the FOMC press conference. Now, this is a big one because it's not like any of the other news events where the news just comes out, the 15-minute candle reacts, and then it's safe to trade after that. With this one, because we have the statement initially, we then have a half-hour press conference. So sometimes there can be volatility for almost an hour around this time, and it's really a massive suggestion to not trade on FOMC day. However, after this has passed, usually about an hour after, then all the volatility dies down and you can assess the price action for what it is and make your decision from there. So there's a couple of things keeping that in mind about the current price action. Because we can count our 3 levels on the 15-minute time frame since the weekend false move, and we can also count them on the 1-hour time frame from the last peak formation high, it does make sense that the FOMC may bring us the midweek reversal today, and that this could be starting to be the first side of a W formation. However, here's the caution. Usually the market does not reverse without what is called a stopping volume candle. And to give you an example of what that looks like, the W right here is the perfect example. This here would be considered a stopping volume candle. It is a candle that creates the low or the high if it's creating an M formation, and it has a very large wick and a very small body, and it comes with a volume spike. So we can see here that this was the spike in volume. It can also look like this. This one's a bit more of a doji, but it's the volume spike that matters because that is what's putting the brakes on in that move in that direction. So this candle right here put the brakes on this move to the downside. Then when we came back to repeat the level, this volume spike here to this candle, this put the brakes again for a second time, and then you see we reverse. Now, you don't always get a stopping volume candle on both peaks of the M or W. You actually very rarely get them on both. You usually only get them on one, but I just wanted to show you 2 examples of what a stopping volume candle can look like. So when we go and have a look at the current price right now, if we're counting our levels and we're in suspicion that we may have the first side of a W so far, we are lacking the stopping volume candle. Now, it can happen on any time frame. So let's go to the 5-minute and see if we have it there. When we look here, we don't have it on the 5-minute. What about the 1 hour? Now, that candle right there is a hammer. It's good, but it's gray. It's not coming with a volume spike. So that's an issue. And finally, we'll look at the 4 hour. And the 4 hour at the time of filming this is not closed. So we'll see how that one goes. That may end up creating in 40 minutes a stopping volume candle, but at this point in time, it has not. So we have to be aware of that as well. Now, when it comes to liquidity, all of these lines that you're seeing on my chart here, they are showing the current liquidation levels for longs and shorts. So these pink lines down here are the longs that will get liquidated if we continue down further, and the blue ones up here are shorts that will get liquidated should price reverse anytime soon. And there's a few key levels also that we have to be aware of. well. The low of the day is where price is testing right now. So that low of the day is at 62,415. If we can break through that, we would also have to break the 50 EMA. That would be more confidence that we're going to have a short-term move to the upside, but still we would need to see the other side of the W form. So would need to do something like that. The problem with that is by the time this second peak forms, we will be very, very close to FOMC. So always remember the pattern, the timing, the levels. You may get the pattern. We can count the levels. We've counted them together already on this show, but the timing may be what ruins you. You may get the most perfect W and the second peak for the entry. If it's only an hour before FOMC, you are asking for trouble to enter a trade there. You would be better off, if it does turn out to be a W, let the W play out, let FOMC finish, and then you'll get a retest and you get in on the retest, and that is a much, much safer trade. Continuing on from that, let's just say we do get the W and we break these levels. We still have other key levels to break before we can really confirm the upside, and that next would be breaking the initial high of today, which is at 64,150, and then last week's low of the week, which is at 64,560. Now they're going to be around the 200 EMA. So if we get our W and say FOMC happens and everything's fine and we continue to the upside, we would expect the W to break the 50 EMA next and make a run for the 200. That's how the model works. Once it's made a run for the 200, it will come back to retest the 50 EMA. By this stage, it should be post FOMC. And this is exactly what I was telling you would be the safer entry. So it's not about what the price will be at the time. It's about looking for this shape right here. The other thing to keep in mind is Ethereum as well. So when we do the 1 hour counts on Ethereum, the peak formation again was formed in the middle of the week for Ethereum last week. We have our drop through here. We have our retracement. We have a second one. We actually don't have a third drop on Ethereum. Now, timing wise, we may not get it. We do have a stopping volume candle here on the 1 hour time frame. We do have some liquidity down below, but we've taken out a lot of liquidity on ETH already. So the damage may be done, and they may now be coming up to take some of these blue levels here. So this would be liquidating shorts as we have a little bit of a retracement. It still has to retest the low of the week from last week. So this could be a spot to look for a W formation. And if that actually happened on this with only the 2 drops, that's called a reset, which I won't go into on this video, but it basically is a confirmation of the macro trend. And we know the macro trend is to the upside, and we're just having a pullback. And ETH has done 25%. You know, these are the kind of pullbacks that we've all been waiting for to buy into altcoins bot that we've wanted for the rest of the cycle. So look for these around midweek today. The timing lines up, the pattern makes sense. Just got to be aware of that news event. And this exact same pattern will happen on any altcoin. So whatever altcoins you're looking to buy, whatever things you're looking to trade, make sure that you check out the links in the description of this video, because I have the biggest trading fee discounts on the internet for you guys, and the fees are going to save you a ton of money in the long run. When you have a look at the funding rate heat map, like there's been so many times that we reach these high orange levels, which is like, look, it can be up to 150% APR. Like that is really, really crazy funding rates. We've washed out a lot of it now, meaning that, you know, that retracement that we've had has reset things, which is one actual positive sign, and kind of makes sense to start looking for that W. But as soon as we start an uptrend again, we're going to go back into orange. So, you know, fees really, really do add up in the long run. And if you're trading high leverage, or you're scalping, or you're day trading often, you need to get these savings on your fees. So I've got multiple exchange links down below. Check them out. There will be something that you can use in your region, and it's going to save you a ton of money. Now, the final coin I want to take you through is Solana, where we can see the M formation, drop 1, drop 2, drop 3 through here, and we may be in the process of changing the trend on Solana as well. This does seem to have a lot of speed in it on the 15-minute time frame. Just note, at the time that I'm filming this, we are actually in the gap between Asia and UK. So this is basically market maker profit taking when it comes to end of sessions. So you wouldn't ape into this. You would let it go. The good news is, if a low is created in one session, being Asia, and we really are going to to change a trend, the next higher low should be created in one of the next 2 sessions. So again, if it's going to be in UK, just be careful of the timing because of FOMC. If we end up getting a second side W, like let this run, however much it wants to run, just let it go. But if we end up getting a second side after FOMC, that's going to be a much better and much more highly probable change in trend.